Hello, hello, hello. Welcome now, Stock Trades. Mic check 1, 2, 3. How's everyone doing today? This video is going to be a mega analysis. You're going to enjoy it. We're going to do what we do best, and that is analyze the stock market. All right. So we're going to go ahead and walk you through some history and some expectations on what you think. By the time you leave this video, you're going to come out with learning some stuff that's new and walk out more informed regarding what's happening in the stock market. So without further ado, let's get started. So we're going to do a comprehensive analysis of historic market downturns and concepts of dumb money confidence. We explore patterns from the dot-com bubble to the 2020 pandemic and beyond. So as you can see here, the dot-com bubble crash, we can see in the S&P 500, literally bottomed out right. It kind of did a 3-point bottom out, which right around October, we got a nice bottom. Again, still revisiting it almost, but really this was the bottom here for the dot-com bubble crash. And what you can see here, this is the dumb money confidence spread, right? So what this is this measures retail investors if they're buying and selling. So if the number's high, that means they're very confident. That means they're buying. And if the number's low, that means they're not confident, and that means they're selling. Just like how you wouldn't ask someone who's in debt and who had 10 bankruptcies for financial advice, you would never go ahead and look at the dumb money confidence and follow their investment strategy. You want to stay clear away from the stock market, or just be weary of the stock market when dumb money is confident. And as you can see here, when dumb money was least confident in the dot-com bubble crash, it was a great buy the dip opportunity, as that was literally near the record bottom. So dumb money confidence hits historic lows, signaling a potential bottom. Obviously, once the dumb money confidence stabilized, there was a really great recovery for the dot-com bubble crash. Okay. Now let's go ahead and talk about the 2008 financial crisis. Retail versus institutional investors. Retail investors sold off while institutions were buying during the crisis. If you don't recall, if you see the movie, Michael Burry, Dr. Burry went ahead, and once he completed his short, he bought stock, and people were like, what? You want to buy right now? Well, exactly, right? When dumb money confidence was at near low during the great financial crisis, which was this dip here, you can see that this was another great opportunity to buy. When dumb money sells, which is in green, that's when you want to buy, right? You want to do opposite of what dumb money does, pretty much, right? And same thing happened with the 2020 pandemic market drop. We saw a significant drop in the S&P 500 and the dumb money confidence retail investors selling. Again, a wonderful opportunity. So you have to have a contrarian perspective. When dumb money confidence is at extremes, it often signals opposite market movements. A zero confidence suggests a potential rally, while 100% confidence may indicate a impending decline. So now let's go ahead and answer the question in the title. How were we able to predict the stock market bottom here at Al Stock Trades? Well, again, we have the data and YouTube as proof, okay? So as early as 2024, the market shows signs of 2023. 2022. This is an typo. In early 2022, the market shows signs of a recovery with dumb money confidence at a historic low, which is right here, right? And we had multiple of these lowing points here, but this was kind of the station here. We had a bottom in October 2022, right? Despite bearish retail sentiment, the market has experienced significant rally since October 2023, which is right here. So if you don't remember, October 2023 is when we had that big rally to the Santa Claus rally in stock market. And then we made a video saying, are small caps going to explode? And then we also made a video here in October 2022 saying, hey, this is a stock market bottom. So we actually called out the stock market bottom, because if you look at here for the S&P 500, it was pretty much a great solid shoot up here, right? And again, despite this, when we were doing our write-ups and speaking to the Clover Health Reddit page, there was very stark bearishness during these market lows. And unfortunately, our accurate predictions was met with skepticism and just complete and utter insults from the retail investor community space. especially on Reddit. But again, we have YouTube analysis as proof. That's why I always wait. And then I go ahead and just, time always tells the truth. So our market bottom call on October 2029, 2022 was met with criticism. Despite lower viewership, it was the correct analysis. This underscores the challenges of educating a sometimes hostile retail audience. Again, I'm chuckling as I'm reading this, but it was really hostile, guys. Okay. So here's the video in question. Stock market bottom streamed a year ago, and we only had 529 views. It's unfortunate, right? But again, you can almost look at the viewership as like when too many people view, maybe it's a sign that we should kind of hold off, right? But when people stopped learning about the stock market, it was a great time. So this video here, you can basically, it's, stock market bottom, and here it is, stock market bottom question mark. And then I have highlighted the date, October 29, 2022, stock market bottom. And we presented the data that shows that we believe October 2022 was a stock market bottom. Would you look at that? It's right here. October 2022, which is right here, September 2022, and here's October 2022. You can look at the dates here, right? And there's the bottom. And what do? We went ahead and predicted the bottom. We also went ahead and predicted the bottom for small caps when we made that video regarding our small caps going to explode, right? I mean, I hope that you're starting to see the overall general trend line of our high quality analysis and the true democratization of our research. Okay, so now let's go ahead and talk about current market conditions as of right now. So now that we know we know what we're talking about, and we say this from the most humblest perspective, 2023 really gave a easy to money buy the dip opportunity, really defining recession forecast by many firms. The opportunity to buy the dip was highlighted by the RSI indicating oversold conditions. As you can see here in the green, every time you had a green, which is an oversold RSI, it was really near these market bottoms here, right? As you can see. And this was a wonderful, we went ahead and created this graph here. It was a wonderful opportunity to buy the dip in 2023. But if we were to go ahead and analyze the RSI now, we are in an overbought condition. And if we go ahead and take a look at all the overbought conditions, which were in red, again, the data is quite messy, but it has a general correlation. You can see that it's historically is at market tops, right? So we may go ahead and experience a downward trajectory. Now, here's the thing. We do believe that we are going to get to new all-time highs, but then subsequently after that, we believe, in accordance to our research from 1950 in describing presidential election cycles, we believe the second half of 2024, it will be met with positive equity returns. However, the first half will be volatile. So that's kind of, in general, the trend of what we're seeing. Now, small caps, ETF, and RSI. We're going to go ahead, and after this slide, we're going to go ahead and go to the comment section. So if you do have a question, please comment. The IWM small caps ETF showed a breakdown, while the RSI reset indicates a positive market trajectory. Small caps are expected to grow, but unfortunately, if you look at the S&P 500, it's still near the overbought territory, right? But if you look at the overall drop in the breakdown within our support line for the IWM small caps ETF, you can see that the RSI is resetting, more so from an RSI of 78 to an RSI of approximately 45. This is actually really good because it's resetting the technical analysis grid to follow up by a potential run. And we believe that small caps will be outperforming. Furthermore, the 10-year Treasury yield, with remarks from current members of the Federal Reserve, spiked up today while still respecting our purple resistance line. We will keep a close eye on this to see if it breaks our first resistance line and enters our secondary resistance line. As we described, the 10-year Treasury yield has an inverse proportionality to equity markets. As the Treasury yield increases, the equity markets, such as the S&P 500, decreases. In terms of the US dollar index, we can go ahead and basically see that it broke out of our downward trajectory channel, which aligns with our prediction that we expect 2020 for the second half to be where we should see. So we expect it to run up a little bit, and then we expect it to go down in the second half of 2024, following in line with the presidential election cycle analysis since 1950. And this is basically repeating what we basically said regarding the presidential cycle analysis. Now, from the technical analysis in Wall Street. So let's go ahead and take a look at it. We've been saying small caps, small caps, small caps since October 2023. And would you look at that? The most recent article on Yahoo Finance says small cap stocks are all the rage on Wall Street. Small caps have ripped higher as investors have increasingly bet on interest rates cut in 2024. And if you go ahead, and I believe it's still the main article on Yahoo Finance, you can basically see it here. Again, this is the power of Al Stock Trades. We like to give you data before Wall Street moves because we have literally institutional data sets directly on Wall Street to democratize information to all investors around the world. That's our mission and that's our promise. If you like this video, please consider subscribing and smashing that like button as it helps with the YouTube algorithm. Most importantly, take advantage of our coupon code New Year's as this will be expiring for an $800 off lifetime access, and take advantage of our financing options with Affirm. Ladies and gentlemen, let's go ahead and proceed to the comment section and we'll go ahead and end the video. So you see what Tom Lee Fundstrat said. He thinks Russell will be up 50 to 60 this year, ending 2024. Absolutely, above 3,000. We're thinking anywhere between 2,500 to 3,000 on the Russell 2000. Tom Lee, amazing person. We exchanged some comments on Twitter. Definitely a wonderful human being, I would say. One of those folks that definitely does his homework. Yeah, that's pretty much, in line with all of the research that we basically take in regards to our other analysis regarding smart money, dumb money, confidence spread. To be honest, I think Tom is being quite conservative in his manner. I do believe the small caps are going to run even higher, right? But we'll see. I think that's a little crazy, but still it's a good, yeah, exactly. Very extremely bullish on small caps. But overall, as what you can see here, this is our analysis and this is our research here for today. Yeah, putting some dough in. Hell yeah, absolutely. Well, folks, I hope you enjoyed the video. Hit that like button and definitely take a look at our platforms and our stock terminal and see what we provide. You won't be disappointed. I'll see you on the next one.